Are you ready to uncover the truth about China's financial collapse?
China's economic growth is set to fall behind the rest of Asia.
A crisis that could have unfathomable effects on the global economy. As China's local governments are at risk of default, it's up to the CCP to take the right steps to bring stability back to the economy. But how did they get here? Join us as we dive into the depths of China's real estate bubble and the reasons behind the financial collapse. Because a step into a world of financial uncertainty where one misstep can lead to bankruptcy. But fear not, as our channel, Bankruptcy, is here to guide you through the tough times and secure your financial future. Subscribe now, and let's get started. It is now up to the CCP to take the right steps to bring stability back to the economy. If they fail, the consequences could be catastrophic and have unfathomable effects on the global economy. China's local governments are at risk of default, and if that happens, it could trigger a financial crisis. To truly understand how local governments managed to borrow close to $8 trillion to fund China's GDP growth, we have to back up a little bit. As the Chinese economy grew, Chinese citizens' wealth grew with it. Since the stock market and other investment vehicles weren't accessible in China, families decided to store most of their wealth in real estate. On top of this, owning real estate also has very important cultural significance in China. It decides your status in society and makes you a desirable choice for marriage. The only issue here is that the debt bubble just kept growing and growing as developers kept selling more and more houses. Demand for new construction was through the roof because, why wouldn't it be? People are buying pre-built apartments and value is doubling or tripling by the time the construction is finished. With those kinds of returns, people would buy rocks if it meant profit. But any sane person can see that this isn't sustainable forever. Luckily, the CCP did see this, so they implemented a 3 red line policy for developers to get leverage under control. This is when the house of cards started to crumble. According to one report, some government officials see these protests not as economic protests, but as political ones. That is why the CCP is rolling out all stops to calm the public down. But it's not without its problems. Wait, no. Okay, I'm getting ahead of myself, but first, let's go over what the CCP is doing to get these things under control, and then we'll go over how they're creating new problems. Beijing is allowing nearly 24 cities to lower mortgage rates in order to boost new home sales. The government is forcing authorities to offer 6-month loan forgiveness programs to calm the crowds. And the CCP is giving out $1 trillion in loans to help developers resume construction. Despite all this, analysts believe that it might be too little too late. As the CCP's 20th National Congress nears, Xi Jinping is doing everything in his power to bring social stability. In fact, a lot of experts see the CCP's actions as just a temporary fix for the October 16th meeting, rather than a long-term solution to China's real estate bubble. One way local governments would raise money was by leasing out land to developers. So, if you think about it, governments were directly benefiting from this real estate bubble and over-leveraged developers. The more money a developer can borrow, the more they could bid on lands, thus helping local governments raise more money. But since the CCP's 3 red line policy, the revenue for local governments has dropped drastically, which puts some of them at risk of default. Technically speaking, local governments can't borrow money. So to get around this rule, they would set up companies called Local Government Financing Vehicles, or LGFVs, which allowed them to sell bonds to borrow money. And since these LGFVs weren't owned by the government, investors assumed they were relatively safe bets. But since the property market slowdown, land prices have been falling with it. This will likely trigger unprecedented defaults by LGFVs on the bonds they issued, and if that does happen, it will be a point of no return for China's economy. To fight against this possibility, some local governments tried rolling back the 3 red line policies set by the CCP. But that dream was quickly shut down once Beijing caught wind of the news. As I've covered in my previous videos, people losing trust in the banks is pretty bad, but people losing trust in the government is quite possibly worse. Current LGFV's debt stands at $7.8 trillion, about half of China's GDP. Of course, not all bonds are at risk of default, but even a small percent can send chills through an already cooling economy. Economic growth is the CCP's prized possession. Now, it looks like the old model of fueling economic growth through loans is coming to an end. And as the 20th National Congress nears, every action the CCP is taking is just to maintain social stability in the country. It is now up to the CCP to take the right steps to bring stability back to the economy. If they fail, the consequences could be catastrophic and have unfathomable effects on the global economy. In conclusion, the future of China's economy is uncertain, and the world is watching closely. The CCP is facing a tough challenge in stabilizing the economy and avoiding a financial crisis. With local governments at risk of default and the property market slowing down, the stakes are high. Every action the CCP takes in the coming months will have a significant impact not only on China, but on the global economy as well. And that's all for today. Thank you for watching this episode of Bankruptcy. If you want to stay ahead of the game and secure your financial future, make sure to subscribe to our channel and turn on notifications. Until next time, take care and stay informed.